Hi and welcome to Swissquote's Daily Market Talk. It's Thursday, May 8th. The Fed's decision yesterday was hawkish, but the Fed headlines have been outweighed by news that the US will simplify the rules for chip exports and that they're about to announce a deal with the United Kingdom. So, sentiment is fairly cheery this morning. We will talk about all that in this episode, but before we do, please be reminded that opinions are my own and this is not financial advice. So yesterday's Fed meeting went pretty much according to the plan. It was hawkish, though, as hawkish as it was expected to be. The Federal Reserve maintained its rates unchanged yesterday as widely expected and said that it is not in a hurry to cut them before having more data in hand to assess the real impact of the tariff policy on the economy and inflation. So it thinks that the tariffs could lead to higher inflation in the US and higher unemployment. And even though the jump that we might see in inflation should be a one-off jump and remain temporary, well, there is a chance that it sticks around for a while. So it could be more than just temporary. The thing is, the US unemployment remains low and the demand steady enough to give the Fed time to sit on its hands, according to the Fed yesterday's announcement, until more clarity is seen. And some members at the FOMC also said that they would not support lowering the interest rates preemptively to protect against a slowing US economy. It is not a situation where we can be preemptive, said the chair Jerome Powell yesterday, because we actually don't know what the right response to the data will be until we see more data, he said. Fair enough, it does make sense. He's not Superman. No one is. No one has a crystal ball in his or her hands, and no one knows more than we do how the tariff situation will evolve and how other countries will be reacting to these tariffs or to negotiations, and how all that will play in terms of economic impact for the US and for the rest of the world. So yesterday's FOMC decision and the presser made sense in my opinion. So the US 2-year yield rebounded after the Fed decision. The probability of a June rate cut from the Fed eased to 20% and US equities came under pressure. But the headlines changed quite quickly this time, and news that Donald Trump's administration will scrap the AI chip curbs engineered by Biden administration gave an energy boost to major indices in the final half an hour of trading yesterday. Nvidia, for example, which spent most of the session sideways, rallied more than 3% in the last 30 minutes of trading. Yet wait, the AI curves will not be scrapped, but they will be replaced. They will be replaced by simpler rules, then said the Commerce Department's Bureau of Industry and Security. Hence, Nvidia shares were flat to slightly negative in the after-hours trading for digesting the news. Elsewhere, AMD, which is Nvidia's biggest rival for AI chips, jumped 1.76% yesterday after announcing strong quarterly earnings and after giving a strong forecast as well for the current quarter on demand for high-end personal computers that are capable of running AI software. Now, I still believe that AMD is in a very, very interesting position to grow its influence as investors warm up to the idea that cheaper chips could eventually perform relatively well as the best options and be opted for instead of Nvidia's premium chips, for example. The fact, however, that the Middle East could see its chip curve ease is excellent news for Nvidia, as Middle East countries have deep pockets and they will likely go for the most premium chips, and that's Nvidia's chips. Now, in other big technology news, we had a few technology news yesterday, mind you. Well, Apple announced in the context of a testimony in the US Justice Department's lawsuit against Alphabet that it actually wants to revamp its Safari web browser on its devices to focus on AI-powered search engines. So the latter could mark the end of a $20 billion a year. I will repeat that. $20 billion a year, guys, deal that Google has with Apple to be the default browser on Apple devices. So they will be part of a list of AI-powered browsers instead of being the default browser. Market reaction, a hefty 7.5% slump in Google's share price yesterday on rising worries that these AI-powered engines that keep popping up will prop up competition and eat into Google's decades-long of monopoly in online research industry. Now, note that Google is still quite an interesting AI play in my opinion, as the company has access to a huge amount of data that the competition does not necessarily have, and they will obviously do their best to keep their dominance in the sector, and they do have means to do so. But the arrival of ChatGPT obviously did mark the end of Google's almost monopoly in the online research sector, meaning that Google must make greater efforts today than before to protect its appeal among the growing army of online research websites. So to do that, Google must invest more, improve better, innovate, and reinvent itself. And that sounds like the end of quite an easy money so far. Anyway, zooming out of the big technology companies, equities in China and Japan are looking better today, while futures in the US and Europe are in the positive territory before the European market open at the time I'm talking here this morning on the upcoming announcement of a trade deal with a big country. The big reportedly referring to the UK. Now, the UK, the United Kingdom, is not necessarily a huge exporter to the United States. It would be better, obviously, to have good news with the major exporters like India, China, Japan, and the European Union. But the United Kingdom could still be a promising appetizer before the main course. So we will have more details later today, and a likely 25 base point cut from the Bank of England. So the pound is up this morning, and the trade optimism clearly weighs heavier than the Fed's hawkishness of yesterday, and could eventually set the tone for the rest of the week, knowing also that the United States and China are preparing to meet in Geneva later this week to discuss about their unsustainable tariff situation. It is now said that Temu and Shein saw double-digit sales declines in the week following their price hikes to pass Donald Trump's tariffs onto the US consumers. So, good news on the China front could give a further boost to the risk appetite across the global financial markets, but this being said, anything less than a 50% cut to the actual tariffs wouldn't do much to sustainably improve mood, I think. So one of the tools that the US companies use to counter the tariff-led economic worries and their negative impacts on their share prices and also the downside revision to their earnings is to buy back their stocks. So this is a very common way for the companies to obviously show confidence in their businesses and in their companies and support price action. But just maybe, this time it is also about returning the money to investors due to the delayed investment plans amid trade uncertainties. Bloomberg highlights that the US companies announced more than $230 billion worth of share buybacks in April, and the amount of share repurchases announced in the US over the past 3 months surpassed the $600 billion mark. So this is all the money that is not going to be invested by companies in new projects and should, in the medium to long run, play against their growth prospects. So let's hope that the trade news are going to be positive to turn the winds around. So this is all for today. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, on LinkedIn, but also on WhatsApp, Threads, Telegram, and Blue Sky for regular market updates. Subscribe to our YouTube channel for daily market comments, and please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow, and until then, good day trading.